I'm John Godby with Teacher Homebuyer Real Estate, and today I'm with Leah Rowland, who's with MSI Credit Solutions. She's one of the most knowledgeable people I've ever met in the area of credit, and so I'd like to say it's a pleasure to be interviewing you. And my first question is for the teachers that I serve: what can they do? What are the most important things they can do to improve their credit or to maintain their credit?
Well, to improve their credit, they need to become current on all of their open lines of credit. Consistently pay on time, no additional payments. It's important to also have a revolving line of credit and to keep the balances below 30% of the available credit limit.
So that would mean that if I don't have a credit card, is that going to help me or hurt me?
It's going to hurt you. You need to be able to establish payment history, which is 35% of your score. So if your scores are not high enough to be able to get approved for a credit card, you would need to get a secured credit card. And I have a list of options. If they reach out to me, I'll be glad to share that with them.
Okay, so a secured credit card would be a card that they've prepaid for.
Yes. Some secure credit card creditors do require the full amount down. I've run into some that only require a deposit.
Oh, really?
Uh-huh.
So, in other words, if you don't have a credit card, you need to get one.
Absolutely.
And if you had a credit card but you tore it up, then that's going to hurt your credit.
Well, it's going to eventually close the account.
I see.
Without any activity, a creditor will close the account. So I suggest to my clients that they use their credit cards at least once a month, and they turn around and pay them off to zero balance prior to the creditor report date.
So you want them to pay it off 100%?
Absolutely.
Every time?
Mm-hmm.
Okay.
And the reason for that is 30% of the credit score is based on the balances versus the credit limits. Mm-hmm. So if a client has a $200 credit limit on a Capital One credit card and they utilize $60, which is 30%, they need to find out when that creditor reports each month and pay it off before they report. Most creditors report the day after they cut the statement. Mm-hmm. So even if you're paying by the due date, they've already reported a balance. So they've reported that you only have 70% availability on that credit card. Even though you've just used 30, that will lower your score a little bit. So it's best to run a zero balance each month while you're trying to build your credit score.
I've got it. Very interesting. So, okay, so you need credit. Mm-hmm. You have to use credit.
To build credit.
To build credit. Mm-hmm. And credit is your history of reliability as a payer. It's
right.
Not how much money you have.
Exactly. Your employer doesn't report to your credit. If you are a tenant in an apartment complex, most of the time they do not report to your credit. Your utility companies do not report to your credit unless you default. The bank account that you have doesn't report to your credit unless you default. So there's no way to be able to show any type of payment history unless you have an installment or a revolving line of credit that's open.
Got it. Okay, so that's 35% of your score.
Your payment history is 35% of your credit score.
What's the rest of it?
30% of the score is your balances versus your credit limits, and that would be on your revolving. And so,
what does that mean?
Well, if you have a credit limit of $200 and you've charged more than what I've been saying, 30%, that will drop your score. In other words, it's better for you to have a zero balance on a line of credit versus a high balance. Mm-hmm. So you need to make sure that those are paid down. So that's 30%.
And if you pay it down to zero but you never use it, that's not good either.
No, the creditor will eventually close the line of credit.
Got it. So you want to use it but not overuse it.
Right. And then an additional 15% of your credit score is based off the length of your credit history. So once you've established a revolving line of credit, mm-hmm. it's best to keep it open. So if you were to start building your credit with a secured line of credit, I tell my clients that after they've had that line of credit for 12 consecutive months, they can then call the creditor and ask for them to transfer that over to a regular revolving line of credit. And they will do a credit check at that time. And then you continue to build your payment history that way. A lot of people have reached out to me that have recently closed their lines of credit, and I call that credit score suicide. Do not close them.
Okay, yeah. All right, so what other things do they need to keep in mind besides keeping their credit open and keeping the balance low?
Well, an additional 10% of your credit score is based on the number of inquiries and new account openings. So it's not healthy for someone's credit to have multiple inquiries and new accounts. And then an additional 10% is whether or not you have a healthy mix of credit, installment versus revolving.
And what's the difference between the two?
An installment account would be a line of credit at a bank, or a car loan, or a mortgage, or a student loan. The easiest way to tell the difference is if you have the same dollar amount payment each month until your balance is zero. That's normally an installment account. The way that the bureaus read it is they want to see for every installment account, a healthy mix of credit is to have 1 to 2 revolving accounts.
So revolving would be like a credit card where you have a different balance each month.
Based on what your balance is at the end of your billing cycle.
Right.
So if you have a car loan and 2 student loans, a healthy mix of credit would be 3 revolving or up to 6.
Okay. Interesting.
So that's basically how scores are calculated. So your initial question was, how can a teacher help improve their credit score? That's just a basic rundown of how the scores are calculated. Now, if they have negative line items on their credit, that's going to go against their payment history. So that's a huge part of the score. That's 30%. So when I say negative line item, I mean collection account, late payment. You can have a lien, a judgment, a bankruptcy, any type of public record. That's what we do here at MSI is we work to get the inaccuracies and the derogatory line items removed based on federal law that protects the client from the credit bureaus.
I've had many teachers ask me, how can I get my credit score for free? And I think you were saying the other day that that's probably not the best idea for them.
Well, there are websites that offer a credit report for free, as would be freecreditreport.com. Normally that is just a consumer report, and so it only gives you 24 months of payment history. It's not a complete report. It would be my recommendation to a teacher to reach out to a loan officer or myself to get a credit report pulled, a mortgage enhanced report or a tri-merge bureau report, and that gives the full payment history and the scores. Even if you pay for your scores at freecreditreport.com, they're not going to be accurate because it only shows 24 months of payment history.
And I've also seen that they use a different scale sometimes. So,
well, basically it just shows 24 months of payment history.
Okay.
Yeah, that's the difference.
So, but the results are going to be the same numbers that you would get in a standard credit pool. Is that right?
The numbers are skewed because it only shows 24 months of payment history.
Okay, so it's only recent.
They're inaccurate. Yeah.
Got it.
But I offer a free consultation to all potential clients. I will have to have a copy of a credit report to be able to schedule that.
Right.
Once I have the credit report in hand, we'll set up a time to meet either by phone or in person here in my office. And what I'll do is I'll teach the client how their scores are calculated. I'll go over the credit report in detail, explain to them how MSI does what we do, and I'll get them pricing.
One of the things that many teachers have done some sort of credit repair in the past, and they've had kind of disappointing results. Either their scores went up for a while and then they went back down, or they didn't hear regularly from the credit agency they were working with. How is MSI different from that?
Do you mean the credit repair agency they're working with?
Yes.
Okay.
Yeah. And the service you give.
What sets MSI apart from all of our competitors is that we are the only company that offers a written money-back guarantee based on a particular increase in scores within a certain timeline.
Wow.
Yeah. My average client sees at least a 100-point increase within 6 months. Many, many times it's been 200 and 300-point increases.
What difference would that make in a person's life?
Oh, it would just open up all types of doors of opportunity.
Such as?
Well, your insurance rates are based off of your credit worthiness. I was a client of the program before I became a consultant with the company. My insurance went down $60 a month after my scores improved.
That's your driver's?
Yeah, that's my auto insurance.
Wow.
So I always encourage my clients when we're done with the program to get pricing on new auto policies.
I see. And
gives you the opportunity to purchase homes, automobiles. If you have a current auto loan that has the high interest rate, if you have bad scores, more than likely you do, you can refinance it, save money there. It hurts employment. A lot of potential employers check your credit now.
I've even heard that the government won't hire people.
Oh, absolutely. Absolutely.
Well, that's very interesting. So there are multiple reasons to get your credit in good repair, whether you're going to buy a house or not.
Right.
And you think that over the long term it would pay for itself?
Oh, absolutely. Absolutely.
How long would the average person have to work on it before you see a result?
My program is an average of 6 months. However, you're going to start seeing results within 30 to 45 days.
And so why would you continue for 6 months if you're already...
Because there's a 5-phase program, and you won't see all of the results within the first 30 to 45 days. Sometimes we have to take different approaches with the creditors and the bureaus to get the end result that we want.
Some people are afraid to check their credit because they know it'll hit their credit score.
They should be.
What would you say to them? I mean, obviously, if they're going to get their credit checked, it's going to drop their credit score a little bit.
You're going to have to a little bit, but
it's just necessary.
It's necessary to see where you are, where to begin.
I see.
And I don't recheck their credit while they're in the program. I watch as the negative stuff is being removed from their credit and they're establishing payment history. I know the scores are going up.
Is there something they have to do on a regular basis to keep you informed? Or?
Yes. Whenever we dispute to the bureaus and the creditors, it is on the behalf of the client. So those results will be sent through the mail to the client's house, and they have to forward that to my office, and it has to be the originals. It can't be a scanned copy. So I have to call and remind them sometimes just to send that in so we can show them the results.
So you've got to be a participant in your own...
You do.
Yeah.
And I've never seen a client that didn't want to be.
Oh, no.
Yeah.
No, I think everybody wants to know what's going on and to be part of it. So,
right.
Especially if you're taking care of something that's been a long-term problem. So.
Yeah. It takes time. You know, everyone wants to do it now. The problem I'm seeing in today's market is someone will find a house, it's a really good deal, then they'll find out their credit is not good enough to be approved, and then they have to start from scratch.
Oh, I've had that happen so often. You know, we can't start with a client unless they've been approved for a loan, because if you're looking for a house, you're going to fall in love with something, and as soon as you do, you're going to want that instant credit to happen, and the house is going to be gone long before the credit takes care of itself. So
I would encourage the clients to start now, get their ducks in a row, so that they can take the next step, and that would be to get a pre-approval through a lender, and then call you to go find their house.
We've got some great programs to help people save money once they can get approved, but you have to get approved before you can get a grant, or before you can even think about making a down payment on a house. Well, it's been a great few minutes, and I appreciate your time.
Thank you. I'm excited.